Traders, welcome back to the best trades this week, episode 3. What a week it's been, and I sure hope that you're able to get into some really good moves. You've probably seen the markets this week. Some of the trends have really been respected. Some key levels have retested really beautifully, and we've had some great continuations. So we're going to go over 10 pairs. We're going to do some scaling down methods here. We're going to look at some higher time trading opportunities, entries, and some techniques you can use, and just end the week with a bang, to be honest with you. If you haven't had the best of weeks, just remember it's only one week out of many more to come. And if you've had a great week, then let's see what opportunities you may have got into or could have got into. And by doing this, we'll just help build on our pattern recognition for the future. And as long as we continue to practice this, then you could definitely guarantee your success as long as you're patient and you're persistent. So the first pair that we'll take a look at is pound USD. Now the week started on the 17th, which was in and around this area here. So starting of the week, we could see that the markets were clearly trending to the upside. One of the most important factors we look at here when taking a trade in a trending market is looking for price to break close above structure. Now once price has done this, as you can see here, we know this is in a push phase. Now there are entry techniques and scaling down methods you can use to find entries within these movements here by finding support and key levels, patterns, and breaks of structures within these single candles or structures to then look for entries on maybe like the 30-minute, 15-minute, 5-minute, 1-minute. But if we're looking at this from a high time frame perspective, what we're looking for is for the price to create a structural high. And at this point, some of you might be like, well, do we know that this is a structural high? The answer to the question is no. The only time we know it's a structural high is once we start to see momentum, which is this candle here, pushing to the downside. And then what we can anticipate at this stage, or unless we get multiple wick rejections, is a continuation back to a key level. Two key levels that we'll be looking at would be the major structural level that made the high, or it'd be the retest level where we can see prices come back to. Now, one of the most important factors here on a retest is looking for these wick rejections, and once identifying them, then saying to yourself, does the confluence line up with the trend, the structure, the break, and the retest? Once you have enough confluence to validate that this is a valid retest, then you want to start going down to your lower time frames and scaling down. So we started on the 17th. The plan was to wait for price to get back to this key level, which it did. We have our 4H candle close after this strong bearish candle to the downside, leaving a wick rejection and a bullish close. At this stage, we're not anticipating the market to continue rallying up. What we're anticipating the market to do is create a level and then come back to that key level to then eventually respect that level before continuing up. We identify this as a double bottom pattern. And as you can clearly see here, this is represented by price creating a level, leaving the level, coming back, and then continuing up. So let's go down to our hourly time frame with this in mind, and let's see what kind of patterns we can find. So here on the hourly time frame, what we're identifying is the high time frame structure. Remember, this is the break, this is the high, this is a momentum shift, this is price coming back to this key level. This is the level where price is respecting, and then here we have the pattern that we're looking for, which is a double bottom pattern. Remember, we don't want to take the trade immediately. We want to support our trades with confluence and added confluence. And as you can see here, we have a beautiful double bottom pattern. So for GU this week, an absolutely beautiful trade here after this momentum candle, really strong bullish candle, double bottom pattern into a major key level in the market. Stop loss just below structure here. Don't focus on the pips. Remember, everybody, pips lie, percentage doesn't. So it doesn't matter if your stop loss is 30 pips, 100 pips, or 1,000 pips, you still risk the same amount. Obviously, your account size does make a difference here, because if it's too small, then a bigger stop loss won't allow you to risk 1% as an example. But I'm sure you get the point moving forward for your future trading. So perfect opportunity on GU, beautiful buy, back to some of these key level highs here. And as you can see, when price came back, it did start to reject it, but that's not the point. Went for a 1-to-3 risk reward ratio trade, found the evidence, confluence, supporting confluence, and we take our trade based on a continuation back to the upside off of the higher uptrend. The next one we'll take a look at is pound JPY. So the market opened on the 17th, am I correct? Oh, 15th. Okay, who cares anyway. So around the 15th. Now, what we're looking for here, if the market's in a push phase, we're looking for the market to pull back to some of these key levels for a potential retest, or we're looking for price to break out of structure and look for some continuations. So let's find some of the trades that we may have been trapped in looking at this market structure. Here we have a key level where price created a retest after the break. So from an intraday perspective, I already know what this looks like. We'll see if we'll get a trade here. Let's make sure this is correct. It's the 15th that I'm looking for. Right, that's fine. The next area in the market where we could have potentially taken a trade would have been the breakout and retest here. So now we'll just validate these two areas and see what's happened. We'll use, I reckon, the hourly time frame if we're going on the 4H here. So from a 4H perspective, we know the trend's up. This is the 15th, so this is the push into Tuesday, then Wednesday back into the key level here. I mean, to be honest with you, we have just found an absolutely beautiful trade. It makes total sense here, and I wasn't actually expecting to. I did think that we might find ourselves in a little bit of trouble here, but it does look like, from an intraday perspective, based on a 4H structure being bullish, and the 1 hour time frame breaking above this key level, creating the high, the pullback retest into a key level, wick rejections, bullish candle, continuation back to these highs. I mean, this is a gorgeous trade, absolutely gorgeous trade, and this is just simply following the momentum off of the 4H time frame. So wow, pretty nice trade there. Now once price broke the structure, we make a new high. We're still trending up and we're in a push phase, so we're not really looking to trade. If we're focusing on our intraday time frames, we're looking at price creating a higher low, high, and looking for the retest. And I reckon if you was planning to go into this trade, your best confirmation probably would have been this bullish candle. And I think, not because it's lost, but look at the structure here, I think we would have avoided taking this trade altogether. The reason why I say this, we don't really want price to come back to a level and start creating small candles that start moving sideways. So before this bullish candle printed, look what we had here. We had 1, 2, 3, 4, 5 hours worth of information of price moving sideways. If we box this off at this stage here and go to our 15-minute time frame, what you'll start to realize here is that this market is doing what? Starting to consolidate. So the only time you're really planning to take a trade out of this consolidation is if price breaks this structure, retest, then continues, and then you can support this trade with a potentially new trend to the upside and your higher time frame structure. So we wouldn't have taken this, in all honesty, which is pretty decent to see there. That's why we're always waiting for evidence and confirmation. So I think our best opportunity would have been this from a scaling down perspective. Now, if we go to the 4H time frame again on pound JPY, we know the trend is up. We have one intraday trend here, one trade that we would never have taken because of the reasons why we shouldn't have. And if we're waiting for price to come back, we're waiting for price to either come back to this level for a double bottom or this level for a double bottom to continue the uptrend. Let's use our hourly again and see if we might have been tricked into taking a trade. So as price comes back into this key level, we have a really strong trend to the downside, meaning we're not really looking to trade this off of this bullish candle. We're getting supporting evidence here that price is showing us, guess what? We're failing to break. There is a bullish sentiment, but I think what we need to see at this stage, we need to see price break this level, come back, retest, then continue. Or even better still, we need to see the momentum shift and then see price come back, retest, and then continue. So I think at this stage, we would have avoided a trade here. We could have taken the double bottom here. I'm trying to be as brutally honest as I can. Stop loss probably would have been below the major structures here to avoid being stop hunted. And then we would have gone for targets up here and then probably for a 1 to 3. So in an instance of a 1 to 3, we probably still be setting this trade break even or trading stops. If we're targeting some of these structural highs here for a 1 to 2, we could have won that trade. But I'm being honest, I don't think I would have taken this trade personally. I think I'm waiting for the latter, which is price fully showing signs of momentum and then looking to get in a trade. So if I remove this data here and focus on that second plan, which is for price to break close above this structure, look for the momentum, and then wait for price to create some sort of wick rejection for a trade, I can then scale down even further to my 15-minute time frame and start to identify the break above structure. We do actually have a wick rejection retest here, so we possibly could find a trade on the 5-minute time frame, looking at that structure as a perfect break and retest. You see this? So now probably would be going for a breakout trade of the structural highs, anticipating a higher, higher low, and then a higher high. So you go for a 1 to 3 in this instance here. Then you would look for your second best opportunity, which I think you would find after price on the hourly 15-minute, excuse me, on the 15-minute time frame. Once price continues to push up, we're breaking these key levels here in the market, and then we have the retest for the first trade and a second trade here. Now, I don't think we would have got a second trade here. The candles are moving sideways, so again, what we do is we just block those off and identify these moving range as ranging. So I think we found our best opportunities on GJ, which would have been this opportunity here, avoided this range here, look for the break, and then your lower time frame intraday trends here for a continuation. We probably could continue to scale in and find more opportunities, but I think we'll stop at these two on GJ. Next pair we'll take a look at is Euro JPY. Now the week started on the 15th, so the 15th we've had the break of the highs, and we're looking for continuations to the upside as the trend is up. So at this point you're looking for your wick rejections to close, and then you're looking for your scaling down opportunities. Now once the market comes back to this key level, you're looking for your retest and your continuation. I personally would say after this candle, and this candle move sideways, I'm going to disregard this momentum candle because I will now view this as a range. And what I'd much prefer the market to do is find support, leave, come back, create that double bottom pattern, and continue to the upside. Now, I'm only going to be looking for buys because the trend is up. So with that being said, I've identified one area in the market where price is creating a reaction. This is the push phase, which is this area here, and this is a pullback to this key level. Now I have that pullback to the key level, I want to focus my attention around here. So scaling down to a 15-minute time frame, let's say now I'm looking for that double bottom pattern. We have that double bottom pattern here already. So based on this combined behavior, we're not executing a trade. Based on the information here, this means that the market's come back more than 2 times. So we have to start behavior again. Behavior starts by disregarding everything to the left as one behavior, and then new behavior as price creating a level and then respecting that level. The only way to trade this is if we have a clear pattern on the 5-minute time frame to look for an execution. It has to be clean, and if it's not clean, then we cannot take a trade. So from a 5-minute perspective, everything to the left has now been disregarded. We now have information here of a downtrend. This downtrend has now violated the brick wall. Price comes back to this key level, multiple wick rejections, and I'll be brutally honest with you, you probably wouldn't take a trade here unless you was going to take a trade based on the break of this high and then stop losses below for continuations up to support the higher time frame trend, which is making higher highs and higher lows. We disregard the behavior to the left because of the 4 taps, so the higher time frame structure is not valid here. Once price continues down, you have a trend down, so the behavior you can never buy until price creates that double bottom pattern. Once we violate the brick wall and come back, you have multiple wick rejections. It would have been hard to get a pinpoint entry, but a breakout entry here, anticipating a higher high, or the start to the new trend with confluence of the double bottom, I think would be your best opportunity. So that's kind of my ideas on Euro JPY. I don't think they're the easiest of trades to have identified. You could have been tricked for sure, but focusing on the higher time frame trends, if you understand those concepts, you definitely be able to avoid some bad trades and look for some good ones. The next structure we'll look at is USD JPY. So the week starts on the 15th, which is here. Now we have a trend to the upside, which was violated. You know, at this stage, we're potentially looking for the market to continue pushing down, create some lower highs and continuations. And I think the only time you're looking to continue buying this is once the market has broken back above some key levels, because at this stage, you're not too sure whether we're pushing down, reversing, continuing. So I'm waiting for the breakout. Now let's say we identify a price breaking out of the structure here. You need wicks to form to validate a level. Now once price breaks, closes above, you have wicks to validate that level, but you also want to see momentum. So now we have momentum, which is breaking above some of these key levels here, which you'll be able to identify on your lower time frames as a break and retest. And once price starts to form your intraday trends, which is your higher highs and higher lows, your break above structures, you're now looking for price to come back to these levels to retest the level. Now, if it doesn't come back and retest, you don't know that the market's going to continue up at this stage. But what you can do is you can use the scaling down method again by going to your 5-minute time frame. You can then identify the breakout level, the break of the intraday time frame levels, and then what you can do is identify your intraday time frame structures, which is ranging. And then once you've identified this, you then look for the break and retest of these structures. Now again, we have another breakout here to validate the overall uptrend. You are not going to get a trade here unless you're really, really confident in your ability to analyze the markets. But if this came back to retest, we're not going to validate this as a trade. But if it came back, then it will be a perfect trading opportunity. Again, it's not wrong to take the trade. You can get some serious tight entries, really small stop losses. As you can see here, if you identify this as your higher low retest with your stop loss back in the range where it just broke out of anticipate, and even if the retest happens, you'll still survive the trade, and then you can target some really, really big trades based on like your higher time frame structures and looking for potential areas for the market to return to. Now, in all honesty, we don't have structures to work with here unless we scale all the way back. And as you can see, that's what happened. Price came back to some of these structural highs. That's where the reaction was from, and then we had this movement down. Let's put USD to JPY on a back burner. Some little bit of tips and tricks there for you to be able to utilize. I think it would have been pretty difficult to get that trade if you're not used to this kind of approach. Next pair we'll take a look at is Euro New Zealand dollar. We're going to put this one on or give it a red flag. It's just moved sideways for the whole week. I'm not going to start talking about how we can identify trades here. That's not the point. We just want to be focusing on our higher time frames really. And as you can see, it's really messy, been moving sideways, probably just a waste of time even looking at it. Next pair we'll take a look at is Euro Aussie dollar. Very, very, very beautiful structure here. Red line indicates what? A downtrend. We have a level here in the market from the 15th where price was failing to break below, and what you're looking for the market to do is break close below these levels here, as you can see, and then looking for our retest. So once we have our break close below, you're looking for that wick rejection to form. Using your scaling down methods, you're then looking for price to give you a retest of these structures. In all honesty, I don't think you would have got a clean enough trade here. Price broke out, broke back in, got a bit messy, too many wick rejections here. I think you probably would have held tight from taking this trade. So we'll leave Euro US Aussie dollar and focus on another pair. Next pair we'll take a look at is USD CAD. So again, we started on the 15th. We've been in this range for a very long period of time. The overall bias of this market is down, as you probably can see, making lower lows and lower highs here. What we're looking for at this stage though is either a breakout to the upside or to the downside. It really doesn't matter. Once you get that break close below structure, then you're looking for a continuation down. Now there's only one area in the market where I want to concentrate on, not what's happening now, but in and around here where price broke close below this structure. Would we have been enticed to take a trade? Well, let's take a look. Once price broke this structure, the question you've got to ask yourself is, did we break clean enough? Did price leave structure, and did price come back before we get a continuation or evidence of a continuation? I really don't think so, and I think on this occasion we could have avoided jumping into USD CAD too early. Next pair we take a look at is Euro USD. Now you can see the market from the 15th, which was the start of the week, was ranging. We're looking for price to do one or two things here. We're looking for price to break structural highs, or we're looking for price to break structural lows. The only evidence that I can gather here is price breaking this structural low. One thing you have to understand, Euro hasn't been strong at all, especially at the start of the week. So we could definitely identify this as a good reason to start scaling down, looking for confluence. When we go to our hourly time frame, we can see that we've clearly broken and closed below the structure. What we're looking for the market to do is form wick rejections, and once we get the wick rejections, we can then look to our entry time frame. Now we have the 15-minute time frame as our entry time frame. What we're looking for the market to do is illustrate a trend to the downside. So now we have structural highs, lower highs, break close below structure, and levels in the market where price is creating multiple wick rejections. At this stage, we don't want to take the retest at this level because we have candles moving sideways. So what we're looking for the market to do is create evidence of momentum again, which is this break close below structure. Then we're looking for the market to create key levels where prices respect him. And once we get that, we're looking for momentum shifts again. By the time we get a momentum shift or valid momentum shift, you can see the market just continue to move sideways. We do have supporting evidence from our brick wall here, which means we can take a trade. And the way you take a trade on this is at the break of some of these structural lows right here, stop loss above structure right here as a double top pattern for continuation down, or you just avoid this altogether. Either way, this is a decision you'll have to make yourself, but there's a lot to support with the overall structure of the market from the higher time frame showing strong evidence of bearish sentiment, breaks, close below structures, continuation retest, double top patterns. You can take this trade, but if you don't take it, that's also understandable as well. But I think this is a fine example for you to have a look at and think about in the near future. The next pair that we'll take a look at is Aussie dollar USD. As you can see from the start of the week, the markets have just moved sideways. We're looking for price to break out of some of these structural highs here and some of these structural lows. The only breakout that formed was actually today, so we're not going to focus on that. I think Aussie dollar USD we'll put on the back burner. Final pair we'll take a look at is New Zealand dollar USD. And very unfortunate, we have to finish on two pairs that done absolutely nothing for us, but it is what it is. So that's the 10 pairs. I hope you enjoyed this video, and if you have, make sure you smash that like button, subscribe if you haven't, and turn on notifications. Just remember to go over some of the trades you took this week, figure out what you could have done better, what you could have avoided, and how you can apply that new information next week. Anyway, until next time, family, continue to trust the process.